While everyone is chasing the next tech stock, a massive health story is hiding in plain sight. Today, we are breaking down the Hexagon Nutrition IPO review for 2026. This isn't just another supplement company. It's a global leader with a secret financial move that changed everything. Is this the healthy addition your portfolio needs, or should you stay away? Let's get into it. Here is the puzzle. A few years ago, this company planned a huge 600 crore IPO, but one opening now is only 139 crore. Why the sudden shrink? According to the valuation modeling and strategic report, the answer is a major private equity exit. A firm called Somerset Indus Capital sold its stake back to the company last year. This means the family in charge, the Kelkar family, now has a much cleaner business to show you. But does smaller means better for your money? First, let's look at the deal sheet. The Hexagon Nutrition IPO opens on June 5th and closes on June 9th. The price band is 42 to 45 per share. If you want to bid, the minimum lot size is 333 shares, which cost you about 14,985. According to the red herring prospectus, they will officially list on the stock market on June 12th. But before you open your UPI app, you need to understand exactly what they do. Hexagon is what we call a pure play nutrition company. They have three main ways they make money. The brands you know, this is their B2C side. Brands like Pentasure for adults, Obesigo for weight loss, and PediaGold for kids. Doctors actually recommend this in hospitals. The ingredients you eat. They make custom vitamin and mineral mixes for giant food companies. If you see fortified on a cereal box, Hexagon might be a reason why. The global mission. This is their ESG side. They are trusted partner for UNICEF and the World Food Programme, making special food to fight malnutrition worldwide. Now let's talk about the wow factor. Between 2023 and 2025, their profit after tax grew by over 104% each year. Financial data from Value Research shows that they are becoming much more efficient. They are moving away from cheap bulk ingredients and selling more of those high profit brands like Pentasure. Plus, they have almost no debt. Their debt to equity ratio is only 0.18, which is incredibly safe for a growing company. So, what's the catch? First, this is 100% offer for sale. It means all the money from the IPO goes to the owners, not into the company's bank account. Also, they rely heavily on their top 10 customers. If one leaves, it hurts. But there is a big why. At 45 a share, Hexagon is priced at a forward PE of about 15.35x. Compare that to giants like Nestle at 88x or Zydus Wellness at 46x. You are getting a specialist leader at a huge discount. The bottom line. Hexagon Nutrition is a rare, research-heavy business with a massive global reach. Even though the grey market premium is currently sitting at zero, the long-term fundamentals look solid for investors who can wait. What do you think? Is the Pentasure brand strong enough for your portfolio? Drop a comment below. Don't forget to hit subscribe for more simple, expert level IPO breakdowns. Thank you so much for watching. Happy investing.